I've spoken to a lot of European banking CEOs in the last couple of weeks who are terrified that if Donald Trump deregulates Wall Street too much, you're not in a level playing field anymore with Europe.
Look, I think international cooperation is a good thing. So while there's been criticism about Basel, and I think some are legitimate, I think at the end of the day, when Steve Mnuchin and Gary Cohn get involved, they'll work out things with Basel that make sense for everybody. We don't want a level playing field. It's not unlevel today. Actually, American banks have far more capital and far more liquidity requirements. But the fact is, I want the European banks to thrive. If the European banks don't thrive, Europe will not thrive. And so, to me, the regulators should really look at those things that can help the European banks compete and thrive to grow their economies. And much more important in Europe than the United States because they finance 70 or 80% of the economy here. In the United States, the banks only finance 25%. The rest is done through the capital markets activities.
So what are the chances of the U.S. ignoring the rest of the regulation in the world? You talked about Basel. Are you absolutely certain that they will they will reach an agreement?
The U.S. gold-plated Basel, made it harder, added things. And I'm hoping they reduce some of that so that ours is closer to Basel. And I hope that Basel takes a deep breath and make sure that this next round of things, they don't like it being called Basel IV, but that this next round is properly calibrated to both enhance safety and soundness and enhance growth. And they should be looking at both, not just at one.
Which means what? Smarter regulation?
Smarter regulation. So not more or less, just smarter. So like, certain rules, if you look at the United States, I think mortgages would have been $500 billion more had we proper securitization rules, proper legal safe harbors, things like that. People have been very reluctant. A lot of banks have gone out of mortgages. I think in the United States, and the Federal Reserve said it recently, small business formation is lower. First time it's ever been net negative recovery because small businesses tend to generate in a recovery. So net formation is negative for the first time, partially because of credit. A lot of banks, not just big ones, just got out of a whole bunch of small business and certain unintended, and there are always unintended consequences of regulations. Regulators should look at that. So one of the unintended ones, probably out of CCAR, is how hard it is to hold certain small business, certain real estate loans, certain SME loans. And because of that, banks are pulling back to manage their CCAR risk.
How do you rate the European banking system at the moment? Are we going to see more consolidation? We've tried to fix the Italian banks.
Yeah.
So I don't know if you think it's successful or not. Deutsche Bank is trying to raise capital. Are we over the worst?
We were that close to fixing Monte dei Paschi. We knew it was hard. I'm so proud of our people for doing it. We could have gotten it done, and I hope it gets done. The banking problems aren't as big as people say. So Monte dei Paschi, I talked about $40 billion of bad loans. No, it was only so much on the balance sheet, so much already been written off. We think $5 or $6 billion of new capital would fix the problem. And so I would like to see the banks, first of all, in the old days, banks were going pan-European. Because of the crisis and new rules, they've kind of been going back to, I think the right way was pan-European, a pan-European regulator. It's better, they're more diversified, it creates more efficiencies in the system. I don't know what the long run is. So I think eventually you'll see mergers and acquisitions among European banks again.
But that has come from what, CEOs? The problem is that if you make two
I think it's regulators.
weak banks,
I think the regulators have to say what they actually want, whether it's good or not, and then allow it. If they don't allow you to use capital in this country to support capital here, if anything done cross-border is heavily punished through capital liquidity requirements, it won't happen. So some of the things we do, anything cross-border is bad. So you want to reduce it, all things being equal. We reduce it substantially. And, it hurts some of the parties. We have no choice. We have to meet the new rules and requirements. So
we're in Paris with Jamie Dimon.
I want to see the European banks thrive. That's what I want to see.
Okay, because this is good for your competition, or again, this just means the stability of this region?
I want it because it's good for the citizens of Europe, including the low-paid ones. I think people don't look at this clearly. This constant being up on banks, and if you have the European banks still deleveraging, they can't finance growth. And so, you're going to have other people come in and do it, but, some of the investors here are buying, quote, bad assets or assets out of European banks, but their job is to help grow the economy.